Hi guys, welcome back to the channel. I'm Arab the Plug, and in this video I'll be talking about how to turn a small trading account into fortune. So whether you trade stocks, crypto or forex and you want to deposit the smallest amount of money into your account and trade it into fortunes, this video is for you. So in this video I'll be talking about how anybody can turn a small trading account into fortunes in 5 simple steps that I also have used to do something like this. So back then in 2021, during the crypto bull market, I was trading a lot of crypto, Ethereum, BNB and all those crypto. They were making waves during that particular time. And during the bull market, one of the mistakes I made was not being able to identify when the trend was ending. So I was trading all these things with the hope that Bitcoin was still going through $100,000 when at that particular time Bitcoin was around $65,000. So during this time, everybody was hoping that Bitcoin would go to $100,000 and everybody thought the market was still going to be that option. So one of the mistakes I made was trying to continue buying and placing long trade when the market started reversing back then in December of 2021 and until like maybe February, March, April of the year 2022, where it now dawned on me that the market I think has started to be in a downtrend and market is now taking out all the longers in the market and people were losing money. This particular time I had lost a lot of money because I was unable to time the highest point of the market, the all-time high of the market, and I had lost a lot of my portfolio. So this is what I'm talking about in this video, as well as I used during that time to trade back the small account and bring it back up to something reasonable that I built upon that time until this particular time. If you like content like this, ensure you hit the like button and also subscribe to the channel. So now these strategies are 5 and I'm talking about them one after the other. So the first strategy is taking high probability trade. What are high probability trade? High probability trade are trade that whenever you make profit from it, the profit is likely going to clear the previous 2 losses, and that is how I define high probability trade. So let's say for example, in a week as a trader, whether you're a day trader or swing trader, you take 5 trades, and out of these 5 trades you lose 2 of it, and when you lose 2 of this trade you risk 2 pips per trade. Let's say you risk 20 pips per trade. So out of these 5 trades, and losing 2 of it means you have lost 40 pips, right? Now the remaining 3 trades are winning trade, and this trade give you 100 pips. So that is you making 300 pips and losing just 40 pips. So that is what we call high probability trade. The trade whereby once you win one of it, it's going to clear the losses of at least 2 previous losses. So that is what high probability trade means. So that is more like using a very high risk to reward, not risking too much and timing the market so that you know when best to enter to get a very big move. So that is more like, okay, we are trying to catch a very big movement in the market. So I always look at my trade and say, is this trade a high probability trade before I take it? If it's not a high probability trade, I don't want to be in that trade, because only high probability trade can turn a very small account into fortune. So now I'm not talking about trying to risk too much or trying to flip account. I'm talking about trying to grow account reasonably, right? So that is the first strategy. Whenever I want to take a trade, I look at it, is this high probability or not? So when it's high probability, I take it, because instead of taking 5 trades that give you small profit, why not find a trade that has high potential of giving you a massive profit? Because during this small trade that you trade, try to flip your account, you might actually lose majority of it. But when you take this high probability trade, just one of it is going to cover up for the loss of 2 other trades that hit your stop loss. So talking about high probability trade, high probability trades are majorly trend trade that you catch a trend, a uptrend or a downtrend. And most of the time when you trade in a choppy market, it is actually low probability trade. The second strategy is identifying your risk to reward and making the most out of it. This is slightly related to the first point I mentioned, which is more like, okay, risk to reward. What are you risking in this trade? And if you risk this certain amount, what reward are you trying to get? Trading is a game of psychology and risk to reward. This is the 2 most important things in trading. Though risk to reward comes with learning technical analysis, and if you want to learn technical analysis, I actually have videos on technical analysis on market structure, support and resistance. I will link all those videos in the description below so you can watch them and see how I analyze the market and also take my risk to reward. So now talking about risk to reward, I said trading is about risk to reward and psychology, which means that if your risk to reward, if what you are risking is too high compared to the reward you are getting, you are probably doing something wrong. And with this, your $100 account can never grow into 500 or even 1,000 or even 10,000. I'm not saying you can actually grow $100 to 10,000. It is realistic, but it's time consuming, and you need to be an expert, and you need these strategies to do them. But it's going to take you a long time, right? And you can actually grow $100 to 1,000 too, and then from 1,000 to 10,000. So I prefer you do all these things in stages. So the third strategy I'm talking about is set a risk level per trade and follow it religiously. One of the things that affect traders is that they want to flip accounts. And once you want to flip accounts, you can't actually flip $100 account to 1,000 if you are not super good in trading, and if you are not willing to risk it. There is two ways to it. It is either you want to grow the account, which is going to take a long time and a long process, or you want to flip it, which is 50-50. If you want to flip an account, it is 50-50. You are taking a very high risk, right? You might be taking a lot of low probability trade, which some of them might come as a winning trade, and some of them might come as a losing trade, right? And you don't want to be doing this if you want to grow an account. So if you want to flip an account, it's 50-50, you know this. But if you want to grow an account to fortunes, you don't want to be flipping it. You want to grow it over time, knowing fully well that that particular account you are growing is not an account you still want to take money from it and maybe buy shoes and all the stuff during the short term, right? So you want to set a risk per trade and follow it religiously. So you must have a rule-based trading strategy, and set a risk that every trade I want to be risking 10 pips, every trade I want to be risking 20 pips. So if you're trading, if you are taking a trade and you are risking more than 20 pips, then you are not following your trading strategy religiously. And you know with that, you're actually not going to grow that account. So every trade you are going to take must be on the same level when it comes to risk you are trading. But for reward, it might be a little bit different depending on what you are seeing on your chart and the areas of value you are seeing when you are analyzing the market. The fourth thing is to avoid flipping accounts. Yes, people grow accounts over time. Account is grown over time. If you make 10% of your account, it's fine per month. Even if though it's a small account, you know you're actually not taking out that 10%. You want to compound it so that 10% also turns into 20%, into 30%, into 100%. And if you're able to make 100% of your account in a month, it's reasonable. Even if it's a small account, then it means $100 is now $200. And it also means $200 is now $400. And for $500 accounts, it means it is now $1,000. So setting a realistic target and avoiding flipping account is also going to help you grow your account. And the fifth one is increasing your risk as your account gets bigger. That is the biggest hint to it. Now, let's say you have grown your account from $100 to $200, and when you are doing a $100 account, you were risking 10 pips. You actually can increase the risk a little bit so that you know you can actually make a little bit more money. Don't overdo it, but don't remain stagnant because you are trying to grow account. Growing account takes time, but you still don't want to be growing a $100 account to $100 within a year. It doesn't make sense that way, right? So once you know that you have been able to do something reasonably for a month, you have done 50% for example, and your risk per every trade that I have told you that you must stick to it is 10 pips per trade, then you have to increase it to maybe like 13 pips. If you are able to do that consistently for another 1 month, then increase it to 15 pips, to 20, to 25, to 30 pips, until you are able to go to account to like 1,000, 1,500, 2,000, which is reasonably high, which is not considered a very low account, because $1,000 in any country is not a small amount of money. So that is all the strategies I used to be able to grow my account back after losing a lot of money to the previous bear market in the year 2022 and also in the beginning of 2023, to be able to like accumulate more money to trade the crypto market till what I'm trading today. So if you got value from this video, ensure you hit the subscribe button and like this video, and I'll see you in the next one.